Hi, this is Steve Landrusik. Today, we're going to talk about the market, my favorite topic. This video is one of several short educational videos that can be found on our website, www.planipg.com. Go to the resources tab. I recommend that you see them in order. Now, back to today's video, the market. What is the market? We all use the term pretty loosely, or we may not think we're using it loosely, but we kind of are, right? And I do. When I come into work and I ask Allie, hey, how's the market doing, right? I'm referring to the Dow Jones Industrial Average, right? And we're going to learn that that's not exactly the market. It's an exchange. It's something that is used by many people to gauge where things are going. And a little bit of history on this is the Dow Jones Industrial Average was started in 1896 and had roughly 12 stocks in it initially. Now it has 30. It was intended to help kind of telegraph how the economy is doing, not necessarily the market, but the economy. So it's supposed to be representative of the economy, called the Dow Jones Industrial Average, right? And many of the stocks on there trade on the New York Stock Exchange. Many of them trade on NASDAQ and other exchanges all over the world. Maybe another video, but today we're just going to keep it narrow. Dow Jones Industrial Average, NASDAQ, New York Stock Exchange. What's the market, right? So, New York Stock Exchange. It's actually been around since maybe the 1600s in one way, shape, or form. But some time ago, they organized. A bunch of brokers got together and decided on pricing and made it a little bit more legitimate, if you will, more recognized, instead of just a place where people would go and kind of barter for things, right? So, can you tell me who was president all the way back then when the New York Stock Exchange kind of formalized, right? Can you guess? No, it's this one. Ready? Good old George Washington. He was president of the United States in 1792 when the New York Stock Exchange formalized their pricing. And the reason that the politicians of the day got involved is they were still trying to finance some of the war debt. And Alexander Hamilton thought that an exchange where people can buy and sell bonds, which were essentially war debt, that would create a means for them to raise money and so forth. And today, the New York Stock Exchange is used to raise trillions and trillions of dollars for companies all over the world. But it started with this guy over here, George Washington, in terms of it in its current form. But we're talking about the market, not the exchange, right? So these stocks that make up the Dow, stocks that are in the NASDAQ, they trade on the NASDAQ and the New York Stock Exchange, but these are stocks that today we recognize them, but the original Dow Jones Industrial Average, we would not recognize them. 11, 12 names, railroads, Standard Oil, things like that. General Electric was there in the early days, but not any longer, by the way. So the Dow Jones Industrial Average, coincidentally, was started by a fellow by the name of Charles Dow from Dow and Company. We know it as the Wall Street Journal, by the way. Okay, so the Dow Jones Industrial Average, coincidentally, started by this fellow with the same name. Think there's a connection? Maybe. So, this fellow over here, Charles Dow, kind of looks like George Washington with a beard, right? So, as they did then, today they also kind of have an almost arbitrary way of deciding what stocks are in the Dow Jones Industrial Average. And guess what? It's only 30 stocks today. And there are thousands and thousands and thousands of stocks that make up the market. But it's almost like a tradition that we talk about the Dow, right? How's the market doing? Market's up 700. It's down 700. They're not talking about the S&P 500, NASDAQ. They're talking about the Dow Jones Industrial Average. So it's fun to talk about and so forth. But the reason why we're talking about this today, by the way, is so that when you see your investments and your portfolios behave differently than the stock market, for good or for bad. Stock market flies up, you kind of just do okay. Stock market gets clobbered, and maybe you're not hurt quite as much. You know, why is that? So many people think that their portfolio, their investments are going to go the way of the market. Not necessarily, and especially if they're talking about the Dow Jones Industrial Average, because let's face it, that's only 30 stocks. And if you have a mutual fund, just in that single mutual fund alone, you can have anywhere from, say, 30 to 300 different stocks in there. So you don't have exactly the Dow Jones Industrial Average. Probably not, right? So what is the market then? If it's not the Dow Jones Industrial Average, the NASDAQ is kind of part of the market. And the Dow is kind of part of the market too. But for portfolio managers and people who benchmark the market, the Dow Jones is not it, right? NASDAQ, National Association of Securities Dealers. Been around since 1971, the first electronic exchange. Now we get on our phone, we buy and sell stocks, and maybe if we're smart, we call our financial advisor and bounce it off of him or her first, right? But NASDAQ was created to be an electronic means in which people buy and sell stocks. 1987, it became a little bit more needed and popular because we had a stock market crash. People were calling their brokers to get out of positions, and the broker couldn't answer the phone because they were underneath the desk, right? So our regulators wanted us to create a more electronic and friendly way of trading. And it was already there from 1971, so it just became a little bit more widespread and used after 1987, and very much used today. Now, the NASDAQ, as you probably know, they have a bunch of tech stocks in there. They have a lot of other stocks that list, remember that word, list on the NASDAQ. But they have a reputation for being predominantly a technology-driven index. And that's why sometimes we see the Dow going one direction and the NASDAQ going another direction. Which one does your portfolio go into, right? So your portfolio is not exactly the market. So what is the market? Okay, the real market, S&P 500. This is the real stock market. The 500 largest companies that make the cut for the S&P 500. S&P 500, property of Standard & Poor's. Another coincidence that Standard & Poor's have the same initials, S&P 500, right? So the S&P 500 is the real benchmark. It's what we consider to be the market. It's much less arbitrary than, say, the Dow Jones Industrial Average, where you have a committee and you have this fellow called the keeper of the Dow. They get up in the morning and they say, let's kick AT&T out and put this one in, right? The S&P 500, once the companies make the listing, these are the 500 largest companies in the S&P 500. If one of them goes out, presumably 501 steps in the 500, right? Presumably. There's a little bit more to that, but essentially, think about it like that. It's the 500 largest companies in the S&P 500. And then again, we may ask ourselves, why is it that the S&P 500, if we are looking at that as the right index, and we say, Steve, I understand, I get it, that is the true market. Okay, so why is it that the market goes up a whole lot and my portfolio may not? Or it goes down a whole lot, and thankfully mine did not. First of all, if you have a diversified portfolio, you're not going to have 100% in stocks, so it's not going to kind of follow the market, whatever you think the market is. But the S&P 500, the real market, uses this kind of crazy math when it determines what the price is of that market. It's called a market-weighted index. Think about it. He's not heavy, he's my index. Named after a great Holly song of the 1970s. He's not heavy, he's my brother. Look it up if you're under 50. Okay, S&P 500. So, market-weighted index. Again, what does that mean? Lately, NVIDIA's been on a tear, right? It's taken the whole market up with it. Why? By the way, it's not suggesting that you should run out and buy NVIDIA. You know how I feel about that. Investing is a full contact sport, and I feel you should have a conversation with your financial advisor before making decisions, right? But let's just assume for a second that you do have NVIDIA and you see it move a whole lot and it's moving with the market. Why? Because NVIDIA is a very large company. And the S&P 500 is a market-weighted index, which means it treats bigger companies different than smaller companies. So let's make a point this way. Let's make believe that there is no such thing as the S&P 500. And we're going to create our own market-weighted index, and we're going to call it the S&P 2. So that's our index. The Steve Landrosiek Investment Planning Group Index, the S&P 2. Okay. And the S&P 2 has two names in it, hence the name the S&P 2. We have ABC stock and we have XYZ stock. I promise you I'm not going to go too far down this rabbit hole. You're going to get this. You're smart. I have faith in you. So these two stocks make up our index of the S&P 2. ABC company is a company worth $10 million. To find out what a market cap and the company's worth, see some of our other videos and listen for market cap or market capitalization. But let's just say that ABC is worth $10 million, right? Mm-hmm. And then we have XYZ stock. It's worth $1 million. So you have these two stocks that make up the S&P 2, and we open up the day with the index being at 100. By the end of the day, both ABC and XYZ are up $1 a share. What do you think the closing price is of that index? 102? Wrong answer. $111. Why $111? Simple. The index will move twice as much based on the movement of ABC. Not twice as much, sorry. It'll move 10 times as much as XYZ because it's 10 times bigger. And because it's 10 times bigger, they're both up $1, but one moves the index $10, one moves it up $1, right? So why do I think it's important for me to put this video up here today? Because I talk to people all of the time. First of all, part of me is tired of people saying, the market did this, the market did that. I understand what the market is. Secondly, I want you to understand why it is that perhaps the stock market is moving differently than your own investments are moving. In this particular case, if it was NVIDIA, which is the case nowadays, and if the stock market goes up an awful lot, if you don't have NVIDIA, you may not be going up quite as much as the market. By the way, stocks like NVIDIA can go down. Anything that goes up that quickly can go down a whole lot. And when it goes down, boy, it brings the market down with it too. So that's all I have today. The video was a little bit longer than usual, so thank you very much for bearing with me. Again, my name is Steve Landrosiek with the Investment Planning Group. We are located at 740 Southeast Indian Street in Stuart, Florida. Our phone number is 772-233-4315. Email me at info@planipg.com with any questions, or if you just want to give me a suggestion on topics that you want to hear going forward. Thank you for watching.